your stories,
your freedom.
The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff here at SchiffRadio.com on a Friday, Open Line Friday. We're taking your calls for the next 2 hours. No guests, just your calls and comments and my reactions at 855-4SCHIFF, 855-4SCHIFF. Well, first I'm going to talk about my experience yesterday down at the Occupy Wall Street encampment in Lower Manhattan, where I guess I spent a couple hours down there talking, arguing with many of the people that had gathered there. So I'm going to spend some time talking about that. But before I do, I want to touch upon what's going on with the markets. We are having a pretty big day globally in the markets. I think one of the catalysts for this move is optimism about the European summit over the weekend on what to do about Greece. I don't know if we're actually going to get a concrete resolution, but the market is certainly preparing for one. And in fact, if you look at where stocks are trading, bonds are trading, foreign currencies are trading, they're all right at breakout levels. And to me, we're either going to move, up or down, but I think right now the odds favor a move to the upside in stocks, a downside in the dollar, up in commodities, down in bonds. If the world responds positively to whatever Europe decides to do or doesn't decide to do over the weekend. And if you look at what's going on, I said the Dow is up 160 points almost at 11,700. That's right on resistance. But the markets technically are looking strong. We keep pushing up against that resistance. We'll likely break through it. Gold's up about $20 on the GLD. I mean, not that big a day, and silver up 0.73 cents. But I think the biggest moves are in the foreign exchange market. The dollar is really getting clobbered. The dollar index is down around 76.30, which is right around the low end of the range. But if you look at all the individual currencies, everything is rising, including the yen. In fact, the U.S. dollar is right near a record low against the Japanese yen. I'm looking at the cash yen. Dollar yen is almost bang on 76 even. I don't think I've ever seen a 75 handle on the Japanese yen. So we could hit a new all-time record low in the dollar yen today. And that, again, is despite, rounds and rounds of intervention by the Japanese government to prop up the dollar. But if this is a breakout, I mean, who knows how low the dollar can go against the yen on Monday. If the yen can continue to be strong, even with big moves up in Australian dollar, which is up almost 1% today, almost back at 104. We had gotten below parity with the dollar briefly, and now we're back at 104. Look at the euro, back above 138, 138 and a quarter. This has been the resistance in that currency. But, if we get some positive move, we could have a huge move in the euro back above 140. And that, I think, would be pretty big, because I think once we break down the dollar index, if we close the dollar index below 76, there's not a lot of support between 76 and maybe 73.50, and that would take the dollar index right back down to the lows that it was at before this entire bear market rally in the dollar began. You can look at the low for the dollar index was August 29th, and it was down at 73.5. And it had a huge rally from 73.5 all the way up to 79.5, almost 80. And it has been moving down ever since. The rally was mainly on the back of worries about Europe and worries about Greece. So it really wasn't so much a flight to the dollar, but a flight from the euro. And then every other currency, as the world began to worry about a global economic slowdown, they sought out refuge in the dollar. And as they are getting confidence in other assets, they are going out of the dollar. The same action you're seeing in the bond market. Look at the yield on the 30-year, now above 3.25. This is the highest the yield on the 30-year has been since September 16th, which was a couple of days before the Fed announced Operation Twist. The yield on the 10-year also, again, higher than it was on the day the Fed announced Operation Twist. But more importantly, if we get this big move up in stocks, big move up in commodities on Monday in response to what might happen in Europe, then you're going to see an even bigger move in interest rates up. Because we are at a key level. Oil, too, same thing. Oil right now is up $2.50 a barrel. We're back at $88.50 a barrel in the price of oil. Still, the resistance to me is around $90. But again, if we get a big relief rally, if we get a breakout in the stock market up, the same thing is going to happen to gold. I mean, to oil. All these markets right now are positively correlated. They're all going to move together. But at some point, people are going to start to get concerned about the weakness in the dollar, because I don't see any way stock markets are going to move up right now unless the dollar goes down. And at some point, it's going to be too much of a good thing. Not that it's ever been a good thing for the dollar to go down, but there are a lot of people on Wall Street in Washington that are convinced it's a good thing. But at some point, they're going to have to realize that, hey, maybe there's a little bit of a problem here, because the dollar going down, hey, that's going to push commodity prices up. It's going to push food and oil prices up. And remember, we're already at 3.9%. According to the government, the trailing CPI is 3.9% now, right now. If we get more upward pressure on prices from where we are now because the dollar is weakening, then it's going to push that number well north of 4%, even as far as the government is concerned with the official numbers. Anyway, let me now move from the markets and talk a little bit about my Occupy Wall Street encounter from yesterday. So first of all, yes, I mean, there are your share of free market, Ron Paul, and the Fed types down there. They're definitely in the minority, but, my perspective was probably a little bit skewed because the people that gathered around me, and we had a very big crowd gathered around me, but naturally, I think if there's people that are Ron Paul types and they see me down there, they're probably more likely than the non-Ron Paul types to kind of get into that crowd. So I might have seen a little bit of a skewed sampling of who was down there. But I would guess from the crowd around me that it was maybe 30% would fall into the free market, pro-capitalist, get government out of capitalism camp, and probably the other 70% were more traditional. We need bigger government. We need more government, tax the rich, kind of Obama types. Anyway, we're running up against a break here, so I will come back. I'm going to continue to talk about some of my experiences at Occupy Wall Street. I invite people to call. We've got some calls starting to come in, but we've still got open lines, 855-4-SCHIFF, if you want to get in on the program, 855-4-SCHIFF. We'll be right back.
Kinda crazy with a spooky little girl like you.
The Peter Schiff Show.
You always keep me guessing. I never seem to know what you are.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
This is Peter Schiff here at SchiffRadio.com. And, I am mistaken. Apparently, it is not Open Line Friday. We've got a guest coming on at the top of the next segment who wants to debate me on the 999 plan. And I'm not really sure, what the direction is going to go in the plan. I think he's going to try to say that the whole idea of taxing consumption instead of income is wrong, but I'm not even certain. We're going to have to wait and find out because it seems a little convoluted looking at my package here, exactly what he takes issue with in my criticism of the Herman Cain plan, because I criticized the plan for the hidden nine, but I didn't criticize the concept of the plan, which is, hey, let's get rid of the income tax, let's broaden the base, let's get rid of these deductions, let's shift more to a consumption-based tax system rather than an income-based tax system, because that is much more conducive to economic growth. And on that point, Cain is absolutely right, but maybe my opponent wants to take the opposite side. It's Robert Wenzel. Maybe he wants to argue that income taxes are good and we'd be better off taxing income and not consumption. I don't know. I'm as curious as you are, so we'll find out together when my guest joins me in about 10 minutes. Meantime, on the Occupy Wall Street trip, that I had. And I'll talk a little bit about it because now I have some calls that I want to take. I don't want to have them keep them on hold throughout the next guest. So I'll probably talk a lot more about my Occupy Wall Street encounter at the top of the next hour of the program, the second hour of the program. But certainly a common theme among the, let's call them the Obama wing of the Occupy Wall Street protesters, is the idea that the economy is in trouble because the rich are not paying enough taxes, and that Bush cut taxes for the rich and the economy collapsed. Therefore, it was the tax cuts on the rich that are responsible for the plight. Incomes for the middle class are going down. Bush cut taxes for the rich. Therefore, Bush is responsible for the middle class incomes going down. I mean, it's all an example of very, very bad logic because, of course, the two are not connected. And, of course, what everybody forgets, all these protesters seem to forget, is that, yes, Bush cut taxes for the rich, but he cut taxes for everybody. So, he also cut taxes for the middle class. So how can you say that if the tax cuts on the rich hurt, but not the tax cuts on the middle class? In fact, if you're looking at the tax cuts from the perspective of what it did to the budget deficit, the government lost more revenue based on the middle class portion of the Bush tax cuts than on the tax cuts for the rich. And, of course, a lot of people were trying to argue with me by pointing to periods of history in the past, when 1950s or so, where the top marginal rate was higher than it is now, and they committed another logical fallacy by saying, hey, the economy was better then, there were better jobs, middle incomes had higher, were doing better, and the rich paid more taxes. Therefore, the high tax rates were the cause of that prosperity. It was because the government took so much money away from the rich that the middle class did so well. And that is it's a logical fallacy. There is no causal relationship between those two. They're concurrent events, but a lot of other things have happened between 1950 and today to undermine the U.S. economy other than simply lowering the marginal rate of tax. The reality is, had we not lowered the marginal rate of tax, maybe the U.S. economy would be in even worse shape than it is today. But, of course, another point that the protesters simply do not understand is that even though the marginal rates were higher in the 1950s, the actual tax paid was lower because it was a lot easier for somebody to have deductions. So let's say somebody had, the equivalent of $10 million in income in 1950, but through deductions, they were able to reduce their taxable income all the way down to $2 million, even though they really earned tax $10 million. Then they only had to pay that 70% tax on $2 million. They paid no tax on the other $8 million. So if you figure out what their average tax is on their entire $10 million, it was pretty low. Whereas today, the guy might have $10 million in income, but only be able to get $500,000 in deductions. And now he's paying the tax on $9.5 million. And even though the rate is lower than what it was in 1950, the total tax he's paying as a percentage of what he actually earned is much, much higher. I mean, I know I've looked at a lot of the deductions and the exemptions and things that were in the code. I personally would take the 1950 higher rate than the rate that exists today. Because I know that under that tax system, the system that was in place back then, that I could have arranged my affairs financially, business-wise, to have a lower effective tax rate than the type of than what I'm paying in tax today. I basically have hardly any exemptions. The only way I can lower my taxes personally is to stop working and just flip stocks and have capital gains, right? But if I want to work for a living and run a business and generate income, earned income, there's no way that I can really reduce my taxes. I'm pretty much stuck. But in the 1950s, the 1960s, the 1970s, there were all sorts of things that I could have done to shelter my income from tax. I could have still had the income, but I wouldn't have paid taxes on it. That's not the code that we have today. And, of course, it's a lot easier for the government to keep tabs on everybody today with all the computerized reportings and all the withholdings and all the crackdowns on offshore entities. It was a lot easier for people in the 1950s and 1960s. If they wanted to keep their money in an offshore bank, hey, it was no problem. It was easy to do. Now it's a whole different ballgame. So if somebody wanted to do something like that, They can't do it. So it was easier to evade the taxes, too, back in the 1950s. Much, much easier than it is today. So people that think, hey, the rich were really, we were really socking it to them. I had one woman there that I was arguing with who really thought that I should be paying 70%. She thought that would be fair, that I should work and I should give the government 70% of what I earn, and she thought I should be happy to be able to keep the other 30%. Meanwhile, a lot of these people there were saying how bad slavery was, and they were accusing me of being in favor of slavery because I didn't want to have a minimum wage. Yet some people there want to enslave me by forcing me to work for 30 cents on the dollar. I mean, if you're giving the government 70% of what you produce, that sounds a lot more like slavery to me, where the government is taken by force 70% of the fruits of my labor. How is slavery saying, hey, let's have freedom? Let's let employers and employees be able to negotiate and choose voluntarily wages. It's that has nothing to do with slavery because there's no government coercion. There's no government force. Government isn't taking anything. Now, people were trying to say, well, employers are enslaving their workers by giving them low wages. Well, slavery involves force. Employers don't chain their workers up. They don't stand over them with a whip and say, you take these low wages or else. You can't enslave. If your employees don't like the wage, they quit. And the only reason an employee doesn't quit is because he can't get a better job. The job that he has is the best alternative that he could find. And so rather than criticizing your boss for paying you too little, what you should be doing is thanking him for giving you the best opportunity that you could find. Because if you could find a better opportunity, you would take it. And, of course, a lot of people would say, no, let's force my boss to pay me more. Well, what if in forcing him to pay you more, he pays you nothing? And, of course, then you end up unemployed. But I've got a lot to say about some of these encounters. Of course, we got a lot of it on videotape. I had Reason TV was with me at the time that we were there. And unfortunately, now I'm looking up. I wanted to try to take some of these phone calls that are on hold. But, I don't think we're really going to have enough time in this segment to address any of these callers. So if everybody can be patient and hang on through my guest, it should be a very interesting debate because I'm not even sure what exactly I'm going to debate yet. So I'm going to find out when my guest joins me on the other side of this break. So it should be pretty interesting. Maybe we'll agree on a few things in the middle of this debate. I don't know. But we will be right back. This is Peter Schiff on SchiffRadio.com.
Schiff Show.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Radio. The Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com. And joining the discussion is Robert Wenzel. Robert is editor and publisher of EconomicPolicyJournal.com. He's been doing that since November of 2007. He also is a frequent contributor to LouRockwell.com. And, of course, Lou Rockwell runs a lot of my stuff as well. Anyway, Robert, welcome to the Peter Schiff Show.
Hey, Peter. How are you?
I'm doing good. Anyway, so I hear you're on the program to debate me on the Herman Cain 999 plan.
I guess so. I'll tell you, I have to commend you for pointing out the problems that there's actually a fourth 9 to Herman Cain's 999 program. I mean, you're right on there. There's no question that the sort of hidden 9 will cause problems for people with regard to their wages, but I think that there are other problems with Herman Cain's program. First of all, the consumption tax will really sort of go back the same way that you argue the the fourth 9 will cause problems for labor and wages. A consumption tax really goes back the same way and will cause problems for labor and landowners and really won't be paid by the consumer. I mean,
who else is going to pay a consumption tax but the consumer? That's the whole point of a consumption tax, is it's paid by the person doing the consuming.
Yeah, no, I understand how, the guy on the street will basically think that way, but my perspective comes from the Rothbardian view, the view of the great economist Murray Rothbard, where and I don't want to get too technical here on, a general show, but if you think of the supply and demand curve, you can't just automatically increase prices and expect that to work its way through the whole system.
Well, obviously, I don't disagree with you in that the sales tax at the margin will shift the demand curve and reduce consumption. That is one of the beauties of a sales tax, which is something that the Founding Fathers talked about, was that an excise tax, which is a sales tax, a tax on an article of consumption, is self-corrective as to abuse. Like, for example, in the presidential campaign, Michelle Obama said, well, what if some future Congress wants to raise the sales tax up to 90%? It's impossible, because they would collect zero, because nobody would buy anything with a 90% sales tax. So the thing is, as the government raises the sales tax, people buy less of whatever's being taxed. So they can't raise the tax up too much, or, it starts becoming self-defeating.
What happens at that point is the laborer and the landowner, the businessman, suffer because they're selling less of their product. And so what happens is the laborer and the landowner have to reduce their prices, because ultimately they have to, as you know, prices are imputed, the market prices.
Well, I don't think they reduce their prices, because remember, competitively, all their competitors are facing the exact same sales tax. So from a competitive point of view, they're not going to reduce their prices. So I think that the supply and demand curve, the supply and demand curves are still going to meet. They're going to meet in a slightly different place, but it's not going to cause a change in the price structure. It's just going to mean that part of the purchase price is going to go to the government, and the rest of it will go to the business. But yes, the price is higher by the amount of the sales tax. So if you have a 9% sales tax, something that used to cost $1 now costs $1.09, but 9 cents of it goes to the government.
Yeah, but see, Peter, your argument going back to the hidden 9 is that what happens is that tax imputes back to labor, okay, and that the laborers get a lower wage because of it.
They get a lower wage in that if they spend all of their wage, they're paying a tax, because a sales tax would be equivalent to a wage tax if 100% of your wages were spent. But to the extent that some of the money is not spent, then it's not taxed, at least not until it's ultimately spent in the future. But in the meantime, the money can be saved, it can earn interest, it can earn dividends, it could compound and not be taxed until it's ultimately spent. And in the meantime, the economy benefits from the productive use of those savings.
Yeah, Peter, I mean, my view on it is really that what the consumption tax will do is ultimately, because the supply and demand market forces where they are now, if you attempt to just put a tax on top of that and raise prices, I mean, it's basic economic sense that if you raise the price, there are going to be fewer people buying a product. That's what happens.
Of course. That's going to happen. But of course, when you have an income tax, people have less income with which to buy products. So you're going to affect people's ability to buy products anyway, because whenever the government taxes people, it's taking purchasing power away from people, which reduces their ability to buy products. The question is, what is a least damaging way for the government to tax people? Is it better for the government to tax our incomes and diminish our purchasing power that way, or is it better to tax our spending and diminish our purchasing power that way? Which one would you choose?
Well, that's my second objection. What you're really doing here is just sort of micromanaging the way something is taxed versus really focusing on the need for taxes in general to go down. It's someone who
Well,
has,
of course I want taxes to go down, but my point is, as long as there are taxes, the government's going to collect revenue somehow. Would you rather them collect that revenue with an income tax or a sales tax?
you know, see, my point on it, suppose you have someone that's a diabetic that you need them to cut sugar out of their diet. The conversation shouldn't be whether they should be having a cake versus a Coca-Cola or any of that stuff. It's still going to cause the same problem. It's just moving stuff around on the chessboard. What needs to be done is for the taxes to be lowered overall, and by
I have no argument there. I want the taxes to be as low as possible, but regardless of how low they are, there's going to be some taxes. So would you rather the taxes that we have be income taxes or sales taxes?
Yeah, well, see, I happen to think that sales tax will go back to the producer. Think of it this way: if you've got
but where's the income tax going? Who's paying the income tax?
Well, it's the land and the wage earner. Because what happens is, if you're selling a widget that some other manufacturer buys to sell to the consumer, and then what happens is the consumers in general lower their purchases because of the sales tax. What's going to happen is that widget maker is going to have leftover widgets, and what's going to happen at that point is he's going to lower his price on the widgets to clear the market. So it's going to cost him because he's going to get less money for his widgets. I mean, Peter, that's the way it works.
But so I still can't see your point. Before we had the income tax in this country, all federal taxes were excise taxes. It was all the equivalent of sales tax. It was duties on imports. It was taxes on liquor, taxes on on tobacco. Same things we have today. Those are sales taxes. Are you saying that you prefer the income tax, that you think it's a good thing that we got the 16th Amendment and that the government is making us fill out all these forms because you think somehow an income tax is a better way for the government to fund itself?
Well, see, that's another thing I question with regard to how much forms are not going to be filled out this way. I mean, you're still going to have taxes. This is not going to eliminate the IRS. In addition, what's going to happen?
Well, that is Herman Cain's. If you look at his plan, 999 is a stepping stone to eliminating the IRS completely and going complete to the fair tax. I mean, I know that I pay a lot of sales taxes when I buy stuff. I don't fill out a single form. My sales taxes don't bother me. I don't have to hire an accountant to help me figure out what I owe in sales taxes. The way you should see my income tax book. My income tax return is probably literally, I'd say, 6 inches thick. That's how big my tax return is.
Disclosure statements. I can imagine what you must go through. Okay.
Yeah, so I mean,
but basically, what's going to happen is, with this, it looks like poor people in poverty, are going to have to fill out forms because there's going to be a provision in Herman Cain's or there is a provision in Herman Cain's proposal which eliminates that 9% sales tax for people below the poverty line. So what?
Yeah. Actually, now I'm thinking about. I think 6 inches is a bit of an exaggeration. And now I'm thinking. I think my tax return is maybe 1 to 2 inches thick.
Yeah,
but there's a lot of pages.
On it, Peter.
Guys tend to exaggerate the size of things, but
yeah, congratulations on that. So, anyways, what else are you bullish or bearish on the market these days? I'm wondering.
Well, I'm actually bullish. I mean, I think the market's going up. I mean, I thought that there were downside risks, and I didn't think the Dow would get much below 10,000 if it got down that low at all. But I'm bullish. I think the markets go higher, but that's only in nominal terms. I mean, I'm bearish in real terms. I think that the market's going to go down in terms of gold over time, over the next several years, and I think that the U.S. stock market is going to underperform stock markets outside the United States. So therefore, even though I think the U.S. market's going to go up, even though I think the odds are the Dow will be higher a few years from now than it is today, I still don't think it makes sense to buy the Dow when I think there are other stock markets that will do a lot better and other individual stocks I think that will do a lot better, as well as commodities. But I want to, get back to this whole idea. So on the 999 plan, do you think that the 999 plan is an improvement over what we got now?
No, I don't. And here's why. because I think what it does is it gives the people the impression that what's needed is a just sort of a micromanagement moving around of the tax structure versus a lowering of the tax structure. You know, I quote.
I think despite the fact that it raises taxes significantly on the middle class, I think it cuts them on the growth part in capital. But I also think if the middle class are hit with higher taxes, they're more likely to want to elect candidates who will lower the tax rate. Because right now part of the problem is you've got the upper income people paying such a high proportion of the taxes that a lot of middle class and lower class people want to keep on raising the taxes because they don't think they pay them. They think they benefit from those high taxes, and they don't realize that the high taxes are the reason that the economy is so weak and the jobs keep disappearing. But anyway, hey, we got a commercial. We'll be right back. This is Peter Schiff here at SchiffRadio.com.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
We are back. This is Peter Schiff on the line with Robert Wenzel. We're talking about the Herman Cain tax plan. And, Bob, you know, I know obviously you're not a fan of Herman's plan, regardless of the number of nines he's holding. But I'm assuming that you're not a big fan of the current system. So if you were running for president, what would the Robert Wenzel tax plan be?
Well, that's a really good point. And you caught me off guard because I haven't really expected to be elected, so I haven't really thought too much about that. But
well, I don't expect to be elected, but I've thought a lot about what I would like. But, I mean, I'm sure you got some idea.
Well, pretty much as sort of a non-candidate, I've always thought that taxes close to zero were the best bet. But let me think about it a little here in terms of
yeah, I mean, look, we all want taxes to be zero, right? I would really get down with the 0-0-0 plan. The problem is, how's the government going to get its revenue? I don't want them to run a massive deficit because that's even worse than taxing. So, yes, we all can stipulate that we want government spending to collapse so that the taxes will be as low as possible. But we're going to have some taxes. The government's not going to go away, so we have to fund it. So what would your preferred mechanism for funding the government be?
Okay, here's what I would do. I would still very much focus on the cost side and really, you know, basically bring governments down to zero as much as I can. Now this is all assuming that I get elected president. So if I'm elected president, people have to be basically
No. You don't actually have to get elected. I'm just saying what the government, we know, I've already said, we want the government to collect as little money as possible because we want as little government as possible. We agree. But whatever we get the budget down to, let's assume we can cut enough out of the government that we cut the budget down to where the government is only spending $1 trillion a year as opposed to almost $4 trillion. That would be 75% reduction in government spending. How do you suggest the government go about raising that $1 trillion a year to pay its bills?
Okay, I mean, I would cut it lower than.
But it doesn't matter it doesn't matter what you cut it to. You're not cutting it to zero. So what tax system is going to get the revenue to fund what you leave in the government, what you don't cut?
I would take a per capita, you know, basically everyone over 18 years of age and divide it. Divide the number, and that's what.
So you're talking about a capitation? You're talking about a per-person direct capitation tax? So would you want the government to have to apportion it according to the Constitution, or would we amend the Constitution to allow the government to levy a capitation tax without apportionment?
Yeah, now you're getting into legal parts that I'm not familiar with, and I just don't know that, Peter. But
yeah, well, that's what a capitation is. And the Founding Fathers were familiar with the type of tax system you're describing, and they didn't like it. That's why they made it hard for the government to levy that type of capitation, which is a head tax, because here's the problem. A capitation tax, you can't avoid it. And so if the government can levy a tax that you can't avoid, they can make it a lot higher. The beauty of the consumption-based tax system is that it's self-corrective. The government can't force you to buy the products that they're taxing. And so there is a limit to how big the government can be. But under the tax system you just described, even if you're successful in shrinking the government and then funding it with a capitation, how do you stop the government from getting bigger and raising the level of that capitation?
Well, because then people, no. I accepted your premise that the government should be this high. Okay, just to work this formula through. I don't buy that. I think it should be even much lower than the $1 trillion that you suggest.
Well, you're talking. Just interest payments on the national debt pretty soon are going to be $1 trillion. So I guess are you saying we just default on all that?
I would go bankrupt on the Treasury debt. No question about that. Anybody.
So you're talking about complete bankrupt. We don't give anybody anything or restructuring.
Well, we're talking about the Treasury debt. Okay, so the Treasury debt is basically a situation where people have bought into supporting the large debt by actually owning that debt. Okay, and they were wrong. So they would have to suffer the consequences.
Oh, yeah, look, I'm with you on the fact that ultimately when we square the books, if we're going to make huge cuts in government spending, we can't make huge cuts just in spending on programs like Social Security and Medicare and exempt all the people who hold the bonds, especially when so many of them don't even live in this country. So I think everybody is going to have a sacrifice, and everybody is going to have to get less, including our bondholders. But I don't know that we're going to be able to realistically get the government to the point where it's that tiny. We're talking about to get it even to $1 trillion a year. You're talking about cutting 70% of government spending, getting rid of it. To go much below that, if you're talking about maybe having a federal government that only spends $500 billion, you're going to have to go back to the type of federal government we had 100 years ago, when the government was that tiny. Now, I'm all for that. I would love to get there, but realistically, we're not going to go there overnight. We can make some cuts, but we're going to have a tax system in place. And personally, I think that the least intrusive, least economically destructive method of collecting taxes is to tax consumption. And I think whether it's a national sales tax, I think that is the least disruptive. I agree with you. It's going to mean that prices are higher, but if you tax incomes, it's the same thing because the prices aren't higher, but the people have less money to spend on the prices. So the net is the same. But the thing is, if you get rid of the IRS, you get rid of all the accountants, you get rid of all the lawyers, you get rid of all the sheltering, you get rid of hundreds of billions of dollars in wasted resources to comply with that monstrosity. We take back our individual liberties. We don't have to fill out all these forms. We got no more IRS harassing us. And we're taxing people when they enjoy their wealth, not when they make it available to others. If they want to defer their gratification, if you want to earn money but not enjoy it today, if you want to defer that enjoyment by investing it, by putting it into job creation, to capital formation, to growing the economy, then we don't want to discourage that activity through consumption because the government is pure consumption. So when the government takes money from one person and spends it, that's just changing the consumption in the economy. But when they take money from somebody who's going to invest it and they take that money and they spend that, then we're really undermining the economic growth of the entire country.
Okay, Peter, what I'm going to do on my site, economicpolicyjournal.com, is I'm going to put a link to the article by Murray Rothbard, who's probably one of the greatest economists of any century, who explains in detail why the consumption tax goes back and really does not affect the consumer, but affects the.
All right. Anyway, I'd be interested to read Rothbard's take on that. I'll take it out, look at it. Anyway, hey, thanks for stopping by on the show to argue the point. Anyway, we will be back. We got another full hour coming up here on the Peter Schiff Show on SchiffRadio.com.
The Peter Schiff Show.
Make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on. Call in now. 855-4-SCHIFF.
That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories,
Your freedom.
The Peter Schiff Show.
This is Peter Schiff. Hour 2 of the Peter Schiff Show is underway. At this point, the stock market is consolidating, in fact, building on its gains from earlier this morning. The Dow is now up about 200 points on the day, 11,740. The dollar, the opposite, continues to be under pressure. Euro now trading at 138.40. A little bit higher than it was earlier this morning. Japanese yen still holding at about the same level, with dollar yen just teetering on the new all-time record low for the value of the dollar in terms of Japanese yen. You know, my discussion that I just had with Robert Wenzel, one more thing I wanted to point out. I guess I should have done it when he was still on the air, but I forgot. It wasn't that I'm just trying to make a point when he's not here to defend himself. Maybe he can address it in an article or something. But, you know, he mentioned that the tax system that he wants to go to would be a capitation. And apart from the constitutional issues involved in direct taxation, the way a capitation tax works, a head tax, is the government figures out how much they want to raise. They divide it by the number of people or whatever, or even that would be if they wanted to apportion it. A capitation tax would just be a head tax. Every American pays a tax based on the fact that they're there. But there's no other criteria. It's just everybody pays the same tax, you know. And so think about the way the liberals would react to something like that. You know, look at all the tizzy they're in over Warren Buffett paying a lower tax rate than his secretary. Of course, I've already said that's not true, because he pays a huge tax as a shareholder of Berkshire Hathaway, and they're not counting that. They're only looking to what he pays as an individual, not his individual share of the taxes that are paid on his behalf by his corporation, Berkshire Hathaway. But even though Warren Buffett pays, you know, a 17% rate of tax, which is lower than his secretary, his actual tax bill, I forget what it was, let's say it was $10 million. I mean, it might have been a little bit more or less, but it was a big number. I'm sure his secretary, even though she might have paid a higher rate than 17%, what could she have paid in taxes? 10 grand, something like that? I don't know. I'm not sure what he pays his secretary. But obviously he paid a lot more money than his secretary did, despite the fact that the rate might have been lower. But under the capitation, Warren Buffett and his secretary would pay the same tax, the same dollar amount of tax. So, I mean, people would really go ballistic for a tax system like that. See, at least under like a flat rate income tax, even though everybody pays the same rate of tax, if you have 10 times the income of somebody, then you're paying 10 times as much income tax. But under a capitation, even if you have 100 times the income of somebody else, the two of you are paying the exact same amount of tax. So that ain't going to fly. I mean, it flies with me, but it's never going to happen. But anyway, before I go to the phone calls, just a couple more words on my encounter on Wall Street. First of all, you know, I actually had one guy. This is one I remember. I think it was a woman. She tried to tell me, you know, because she was pointing out how the rich used to pay much higher taxes at one point. And I said, well, wait a minute. Why are you starting in the 50s or 60s? Why don't you go back earlier than that, when there was no income tax at all and the rich people paid no taxes? You know, we had even more economic growth during the 19th century, when the rich paid no income taxes than we did under the 20th century. And her comeback to me was, that's why we had a Great Depression. So the Great Depression was the result of the rich not paying enough taxes. I mean, talking about revisionist history, it really is incredible the extent to which people are so brainwashed into blaming everything on the rich. And they don't even understand how the rich got rich. Yes, I understand Wall Street's giving the rich a bad name by getting their money through bailouts. That is the problem. Crony capitalism is tarnishing the image of true capitalism. But they don't understand that rich people get rich by creating the middle class. The middle class has come from rich people trying to get rich, because they have given the middle class the jobs, and they have given the middle class the stuff to buy with their paychecks. All of it comes from the producer, the entrepreneur. And the way you get rich is by satisfying a lot of people's demands and desires, by coming up with products that people can afford, and creating and inventing new products. I mean, if it wasn't for the rich, I mean, all those protesters would be standing there naked because they'd have no clothes, because the people that made the clothes did it to get rich. In fact, everybody would be, at home. Everybody would live by themselves because you'd have to grow your own food, because how would you get food? If nobody could get rich, then nobody would have an incentive to grow food and sell it. Everybody would have to make their own food, make their own clothes. Everybody would do everything by themselves, because the reason that we have these products available is because somebody is trying to get rich. And if there's a lot of the product out there, it means they got rich because they came up with something that people wanted. Another guy had an argument with one guy when I tried to say that businesses create jobs. I said, how could you be so anti-business? And, they create jobs. And his response to me was that businesses don't create jobs. Okay. Where do jobs come from? And he said that consumer spending creates jobs. Well, I was able to quickly shut him up. I said, well, consumer spending creates jobs. Where do the consumers get the money they're spending? And he said, from their jobs. And I said, exactly. It's the jobs that come first. The consumers can't spend if they don't have a job, and they have nothing to spend the money on if there's no production. And so it all starts with the business, not with the consumer. The consumer is the ends, the business is the means, and if you attack profits, you're attacking all the wealth creation, all that stuff. In fact, actually, one guy actually came up to me, a young guy, and he was like, he wanted me to give him a loan right then and there on the spot. He wanted a business loan. And at first I'm like, you want me to loan you money? I just met you. But I tried to show him, though, the point of the matter is, even if he wants a business loan, that means somebody has to have savings. Somebody has to generate a profit that the government didn't take away so that he could lend it to him. And I tried to explain to him how starting a business was going to be so much more difficult for him, given all the rules and regulations he would be encountering if he actually was able to get the business off the ground. And all those added costs would work against the viability of his business and therefore make somebody less likely to lend him money, because the government taxes and regulations make it less likely that he would succeed in his venture. But anyway, a lot of interesting stuff. But I want to go to the phones. We've got a lot of people that have been holding patiently. First is Chris calling from New Jersey. Chris, welcome to the show.
Hey, Peter. I'm reading a lot of Rothbard right now, and I'm sure you know how he feels about fractional reserve banking. Do you agree that fractional reserve banking, that the idea of it is fraudulent and inflationary?
I think it is, to the extent that the government subsidizes it, right? I am not against a fractional reserve system with no government subsidies, because then you don't have that big the fraction that the banks hold is very high. Banks are going to loan out money. They're not just going to hold, all the deposits in there. They got to make loans. But when there is no government guarantee, the banks know that they have to have money there in case somebody wants it. And so you can get a good equilibrium where banks can loan out money, but still, have enough to meet the legitimate needs of their depositors. It works. The problem is the government comes in, and now you got the fractional reserve system where there's hardly any reserves, and it's enormously inflationary, and all of that comes down to the government backstops, where nobody has to worry, because if any banks are ever short, the government is simply going to make up the difference with a printing press. Anyway, I don't know if you want to continue with your question. We got a commercial break. We will be right back. This is Peter Schiff here at SchiffRadio.com.
The Peter Schiff Show.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
And this is Peter Schiff speaking about fractional reserve banking with Chris in New Jersey. And I know, Chris, I understand you got a follow-up. But before you do, just want to mention again on the whole idea of fractional reserve banking. If banks are not allowed to make loans, then they can't pay any interest. And banks had a distinction before the government got involved and screwed it all up. If you wanted to put your money in the bank in what the banks called a demand deposit, a checkable account, then the banks didn't loan it out. The banks kept all that money there. there was 100% reserve, but of course the checking account didn't pay any interest. In fact, you paid the bank. The banks would charge you a monthly fee to have the service of a checking account. If you wanted interest, if you didn't want to pay, if you wanted to earn interest on your savings, then you wouldn't open up a demand deposit account, a checking account. You would have a savings account. And that's where the fractional reserve banking would come in, because now the bank would pay you interest on your savings. But the only way you can do that is by making loans. But the banks would decide, hey, I'm not going to loan out all of this, because what happens if the guy comes back and wants his savings? I can't loan it all out because then I can't pay him. So the banks on their own, without any help from the government, would decide, how much reserves they wanted to keep and what kind of loan they would draw. Because obviously they know the more they loan out, the more they can earn, which means the higher they can pay interest on their deposits. But banks would compete with each other, and you would get an equilibrium amount that would be kept, and the system worked pretty well. The problem is now, you can get interest on your checking account, although now you can't get interest on anything because there is no interest. But even before the Fed had rates at zero, the banks really didn't make a distinction, and all of this was supported by government and by the Federal Reserve.
Okay, that makes sense, but with the inflation side of it, now he uses the example, there's 4 million ounces of gold in the economy, 2 million of that is stored in a warehouse, and the other 2 is in receipts. Now, fractional reserve banking would create pseudo receipts for another 1 million ounces of gold and loan that out. Isn't that increasing the money supply by 25%?
It does increase it temporarily until the loan is paid back, and then it contracts. So if you look throughout the economy, you've got loans being given, and you've got loans being repaid all the time. And so the money supply, parts of it are expanding and parts of it are contracting, but it's also going with the business cycle. So it's not necessarily an inflationary force, once it's working throughout the whole system. And, we had fractional reserve banking throughout the entire 19th century, yet, prices were falling throughout that entire time period. So you can't just say that it's going to lead to inflation. The problem is when you get the government guaranteeing it so that, you have tiny, almost inconsequential reserves, and then the money supply constantly grows and grows and grows, that is the problem. But under a real free market with sound money, yes, the money supply goes up because the money supply doesn't just include real money, gold, but it includes the banknotes that are circulating in addition to gold. But the supply of those notes is contracting and declining with the business cycle, and as loans are repaid. And of course, when a loan is repaid, a new loan is made. So, but net, I would say it isn't an inflationary, because I think if you were to say there is no fractional reserve banking, if you're going to say all banks can do is warehouse their money, well, I mean, how is a banking system going to function as a means of consolidating and pooling savings for the purpose of making loans? Hello?
Yeah, I'm here.
Yeah, unless you're going to say that everybody that puts their money in a bank has to lock it up and they have no access to it. They have to, you have to give it to the bank for a year, like buy a CD, and under no circumstances can you have that money. And that way, that money is not really part of it. It's kind of you have no access to it. But I think that overall, as long as we get the government out of it, that I'm not worried about the fact that banks are making loans. I like banks making loans. I just don't like them making government guaranteed loans or loans with cheap money they get from the Fed. I want them loaning out their deposits, not money that the Fed creates out of thin air and just gives them the privilege of accessing it. Anyway, hey, thanks for your call. Next up is Bob calling from Minnesota. Bob, welcome to the show.
Hey, Peter, how are you doing?
Good.
Hey, Peter, I have a three-part question. First, I just want to know what your calculation is on Keynes' hidden 9 tax, how you came up with the 9% from the elimination of the wage deductibility from corporate taxes.
Well, that's where I get it. I mean, if you can't deduct, if let's say I have $1 million in my payroll, and I have no income. My business is operating right now. I have no income. My deductions equal my receipts. So I'm paying no income taxes, and I have $1 million in salary. Now all of a sudden, Keynes 999 plan. Now all of a sudden, I owe $90,000 in taxes because I have $1 million payroll. Well, where am I getting that $90,000 in taxes? I mean, I don't have any income. So the $90,000 is a payroll tax. The tax is on my payroll. It's not on my income. I had no income. What's being taxed is my payroll. Now, right now, there already is a payroll tax. So the payroll tax goes down under the Kane plan. It goes down from 15.3 to 9. So he is reducing the payroll tax, but he is not eliminating it. That's the difference. Kane claims that his plan completely eliminates the payroll tax, and that's where a lot of the savings comes from. For a lot of the moderate income workers or lower income workers, it comes from eliminating the payroll tax. But my point is that's not true. He doesn't really eliminate it. He only lowers it. And when you factor in that 9% payroll tax is still there, it's not eliminated, it's just reduced. And then when you look at the impact of that 9% payroll tax and you add that fourth 9 to the 9% income tax, 9% sales tax, then the average American is paying a lot more under the Kane plan. If you don't include that fourth 9, then the average American is paying a lot less. But they're not paying a lot less because they're going to pay that fourth 9. That is the difference, and that's what makes this plan raise taxes on so many people. And the amazing thing to me is that none of his opponents seem to understand that. I mean, that's a big deal as far as I'm concerned, and I think that's the glaring hole in the political viability of the plan. Not that I'm saying it makes it a bad plan. I'm just saying that it makes it a politically dead plan for people who understand it. And what I think we need, I want to simplify taxes. I want to move towards a consumption-based tax system, but I also want to reduce the size of government so that we don't have to give a huge tax hike to the middle class in order to accomplish it. But the problem is, if we want to grow the economy and we want to keep this huge government, the only way to do that is to put the cost on the middle class, because that's the only segment that can absorb it. If we try to put all the costs of all this government on the high-income workers, the consequence is we don't get economic growth and we don't get jobs.
Yeah. Second question I had is the pros and cons of free trade in the United States, and would it be necessary for us to build back up our manufacturing base prior to implementing a free trade policy?
No, but I am in favor of if we can get rid of the income tax and try to go more towards consumption-based tax, I would be in favor of a flat, across-the-board import tax that would just raise revenues, not picking and choosing specific goods, specific countries, but just a flat tax collected at the ports as a sales tax that would help us to rebuild our manufacturing base and help fund the government. Because the government has to be funded one way or the other. We just have to figure out what are the least damaging ways to pay for the little government that we do need. And I think tariffs would be a lot better than income taxes, and so I would not be opposed to that as an alternative to the current system. Anyway, hey, thanks for calling. We will be back. You're listening to The Peter Schiff Show here at SchiffRadio.com.
The Peter Schiff Show.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
The Peter Schiff Show.
And we are back. This is Peter Schiff here at SchiffRadio.com. You know, I was watching online a new campaign commercial from Rick Perry that was really hitting Mitt Romney. And he actually used, and I'm not surprised because I think it's a real gaffe on Mitt Romney's part, his line where he said, I told the company, I'm running for president, for Pete's sakes. I can't have illegals on my property. I think that's a big deal because it's an admission that the only reason he doesn't want the illegals there is because it'll look bad because he's running for president. That is, a big admission, and it really hurts Romney in his credibility in showing that, look, he's about form. I mean, over substance. He's flip-flopping. He's just trying to be political. He used to be pro-life. Now he's pro-choice. He used to be for Obamacare, so now he's against it, whatever it is. And this really gives Perry a wedge on that because it shows. I mean, this was a slip. The guy was flustered in the debate. He lost his poise, and he let that truthful statement slip out without having it censored, right? Because he never would have written that. But in the heat of the moment, it was a slip because I'm sure that's what he did. I'm sure when this issue came out, he probably talked to that lawn company and said exactly what he said. I'm running for president, for Pete's sakes. I can't have illegals on my property. Of course, if he wasn't running for president, yeah, I don't care. Yeah, of course, let the illegals cut my grass, because after all, who else is going to cut it? But, he got caught telling the truth for a change. And, Perry's already using it against him in this ad. I think it's effective. And he's going to have some explaining to do. A comment like that, because it doesn't look good. Anyway, next up is Charles in Amarillo, Texas. Charles, welcome to the Peter Schiff Show.
Thanks, Peter. Yeah, I think Perry probably, if truth were known, has probably had a few illegals on his property as well down here in Texas.
Oh, look, it's all hypocrisy. I mean, come on. I mean, especially if you live in Texas. But, as I said, it's for somebody, if somebody were running from California, I mean, it's almost impossible. All these politicians at one time or another had an illegal working for them. And it's not, and the thing is, too, I don't like the whole onus of putting it on the employer anyway. Everybody says, yeah, let's force the employer to be an INS, immigration agent. Let's make sure that they don't hire illegals. Again, that's putting the work and the responsibility and the cost and the risk on employers. Why would you do that if you're trying to create jobs? Why would you want to make it that much harder for the employer? He's got it hard enough, let alone making him worry about whether or not the people he's hiring are illegal or not. Let the government take care of that, not the employer.
No, I agree completely on that. I mean, I'm in Texas. I actually called you a couple of years ago during the Wall Street Unspun days on Wednesday nights. And I'm a manufacturer of wooden play sets. I don't know if you remember the call or not, probably. But I used to have about 500 employees in my company here in Amarillo. We manufactured the swing sets here. And now it's all made in Asia. And I don't have near those kind of employees. But anyway, that's my history. The question I have.
And let me ask you a question. Are you selling your swing sets in America? Are those where most of your customers are?
Absolutely, yeah. We sell them all over.
So imagine this. Imagine that we're so inefficient at manufacturing swing sets that you can import them. I mean, you're talking about big, bulky things that have got to cost a lot of money to ship over here from Asia. Yet we're so inefficient that it's cheaper for you to import that stuff all the way from Asia across the ocean than to make it in Texas.
Yeah, that's absolutely true. And it's been that way for a long time, And
that's
actually,
nuts.
Well, the question I had last time was, when am I going to be able to hire Americans again to make my swing sets? And you said, not in my lifetime, which I'm 56 years old, so I don't know if that's because I'm so old that you said that, but it's going to be a long time, before we're going to see.
Yeah, well, I don't know. I mean, I hope it is in your lifetime. And not because, not because I hope you have a long life, but I mean, I hope it happens sooner, because we need to hire Americans. We need to get rid of all the rules and regulations and taxes that have forced you. That's one of the things I talked about when I was there at Occupy Wall Street. One of the other grievances people had is they were upset at corporations. Of course, I have to remind them that corporations are just a collection of people. I mean, they're not monsters. They're people who have formed an association. They're a business that is incorporated. But their gripe is that the corporations are sending all the jobs out of the country. And I had to remind them, first of all, they own those jobs because they create them. The jobs don't belong to the people who accept them. They belong to the businesses. They create them. They can hire anyone they want. But I said, do you think businesses want to hire people in other countries? I said, it's easier to hire people in America. It's much easier. But what happens is the government comes in and makes it so expensive that all of a sudden it's actually easier to hire people in other countries. But if it wasn't for the government, people would hire Americans first because it's a hell of a lot easier.
Hello?
Is a caller there?
Yeah, I'm still here.
So I hope you do have the opportunity to hire. Now, wouldn't you like to hire Americans?
I would love to hire Americans, and I'm still hiring some Americans, but I mean, I find myself trying not to hire people because it's so expensive. It's so
So what is preventing you from hiring Americans is the U.S. government.
Oh, absolutely. No, I understand. I mean, it's all the taxes and all the regulations, and it's just all the paperwork and the insurances and everything it takes to run a business, the overhead. I mean, that's what happens.
Yeah, and so and the people at the 999, their solution for all the jobs leaving the country is more taxes and more regulations on businesses, which will only mean more jobs will leave the country.
Oh, I know it, and I think that's why you told me not in my lifetime, Not in my lifetime am I ever going to see it like it was 15, 20 years ago. But
yeah, I don't know. I don't know why I was so pessimistic about them. I mean, it's possible that you won't hire Americans in your lifetime, but I actually think that you probably will. At some point, you're going to be able to, because otherwise, I mean, if then it's complete. Then then it's going to be a complete Armageddon. I mean, then it's going to be, it might not even be safe to be in this country if we don't ultimately make the reforms that would allow employers to hire Americans, and we're all unemployed. I mean, that I would just hate to think about how bad this country is going to be to just live in if that's the kind of country we have.
Well, what it may take is the dollar falling through the floor, and that's not going to be good. But that may be the only.
Well, no, but that is going to happen. The dollar is going to drop, and then either we're going to reform our ways, or it's going to be an economic wasteland. Because if we can't import the goods anymore, then either we make them ourselves or we go without them. And we can't make them ourselves with all the taxes and regulations. So, either the taxes and regulations go or our standard of living goes. Those are the choices.
Right. Hey, my question was, I've been listening to you for about 3 years, and I remember early on you used to talk a lot about the ARMs in the mortgage, the adjustable rate mortgages, and how that they would reset at some point, and that was going to really be, the beginning of the end. I don't hear you say much about that anymore. What do you have on that?
Well, that already happened. I mean, that was part of the reason that we had the bursting of the bubble is a lot of the mortgages, particularly the subprime mortgages that were like 2 and 28 ARMs, they started to reset. But what's also happened to kind of diffuse that ticking time bomb is the Fed has kept interest rates so low. See, I thought that mortgages that were originated, in 2003, 2004, when the teaser rates were up, that they would have much higher mortgage rates by today. But now they don't. Mortgage rates now are really low. So a lot of these adjustable rate mortgages haven't become a problem yet because the rates haven't risen. The teaser rates are gone, so the 1 or 2% deals, they're gone. But the people that took out ARMs, still have very, very low rates because mortgage rates haven't risen yet. But yes, of course, at some point, interest rates are going to rise and, there's going to be more exploding ARMs. But for a while, that's been diffused. And of course, a lot of people that stopped making their mortgage payments, they're still living in their houses. So the banks haven't kicked them out yet.
Yeah.
And I remember we had a guy call yesterday, a friend of his. She's been living in her house for 4 years, hasn't made a single payment.
I was listening. I heard that. Amazing.
Yeah. And as more and more people, as her neighbors find out that she's living in her house and she's not making any mortgage payments, they feel like idiots for making their mortgage payments. So it's just a disease that spreads. As more and more people find out about it, more and more people want to do it.
Yeah. Well, the other question I had was, if you got time, on your dad, Irwin, I listened to one of your radio talks, I guess, this morning that was on the Daily Paul. And you're talking about your dad. I mean, is there anything that anyone can do to help get him out of the penitentiary?
I don't know. Maybe if we elect Ron Paul, he'd pardon him. I don't know. But, I mean, we got an appeal coming. We have one that's being filed, I think, in a couple of weeks. I'm, doing my best, although sometimes my dad works against that because he's so into this. He wants to put in so many issues that the courts keep rejecting, as tax protester issues, even though they're probably correct. They just fine you for raising them rather than giving you a fair hearing. So, but he's got so many issues that a normal axe murderer would just get out. I mean, if you look at all the normal errors that were done in my father's trial, if he was just a typical mass murderer, he'd already be out, based on all these errors. But since he's a threat to the government, since he's a terrorist and that he's trying to help people understand the tax code, or even if you think he's wrong, just because he has a disagreement over the law and how it applies to the Constitution. He's this huge threat, and so all of his constitutional rights go out the window. But yeah, people can certainly bring it up, call up talk shows, write their congressman. I mean, I don't know, what you do to free a dissident. But yeah, he'd appreciate any help that you can give. Anyway, hey, thanks for your call. We'll be back. We've got a final segment coming up here on SchiffRadio.com. We'll be right back.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com, the final segment of the final show of this week. If you haven't already done so, next week I am journeying down to New Orleans for the New Orleans Investment Conference. I guess it's not too late to get a last-minute ticket to the New Orleans event. It should be a lot of fun, a lot of other good speakers in addition to myself. If you can't make it all the way to New Orleans, especially for those of you out on the left coast in Southern California, remember I am also making 2 appearances open to the public in Southern California in Orange County and in Los Angeles on November 7th and 8th. You can sign up to attend those events. You need to sign up to go because we want to make sure that we have enough seats to accommodate everybody. There are 500 seats, I believe, in each. We still have tickets available. They do cost $20, but they come with a free How an Economy Grows and Why It Crashes, which also sells for $20. But these I'll be able to autograph for you, so they might have a little bit of an extra value with the autograph. So really the lecture is free. You just get an extra copy of How an Economy Grows and Why It Crashes. Also, for those of you who tune in to Fast Money on Friday to see me, I wasn't on. They canceled. I told you these things are last minute, although they did give me a small hit. I think at 5 to 6 o'clock I was on CNBC briefly. They covered me a little bit at the Occupy Wall Street event, or my journey down Occupy Wall Street. But I don't know, they might have had some technical difficulty because I think maybe they only got about a minute or so of footage, not much. It was a hard time really hearing, going back and forth, so maybe they abandoned the whole thing when it was difficult for them to communicate with me. I really wasn't sure. But I am on a Fox show. I forget which one it is over the weekend. Maybe it's on the website at Europac.net. I'll see if I can take a quick look. But I recorded that show yesterday. It was taped. It's airing on Fox. I think it's Fox Business over the weekend. But for those of you also who want to keep pace with my TV appointment, 7 p.m. October 22nd on Fox Business. Not sure the name of the show, but it's tomorrow, 7 p.m. Eastern. And again, if you want to keep track, all my appearances are generally on the Europac website at Europac.net. Anyway, let me go back to the phones. Next up is Tony calling from Chicago. Tony, welcome to the show.
Hi, Peter. Thank you for taking my call. I had a quick question, or actually a comment. I was watching your 2006 mortgage brokers conference.
Mortgage banker speech, yep.
Yeah, and the guy, I think his name is Barry, your opponent, he was saying that things that you're predicting would only come if we had an atomic bomb in Los Angeles, Chicago, and New York. And then he said, we'll see you guys all in about 2 years. And did you guys meet again later on?
No, I've never met him again. And in fact, you would think that he would have reached out to me and made a phone call. I mean, I'm not going to call the guy up for the purpose of saying, I told you so. But you would think the guy would have called me up. Because remember, he said a lot of things to me about, accusing me of just talking my book, of just saying things to sell stocks. And so I was just scaring people. After all, what I was saying, I couldn't possibly believe it because it was, so crazy. You would think after being so horribly and completely wrong and having accused me falsely and how completely right I was, how I nailed it, you would think the guy would call me up and just say, you know what? I got to hand it to you, Peter. You nailed it. You were totally right. I was wrong. God, you would think, because I would do that if I was that wrong. The same thing with Art Laffer. You think a guy like Art Laffer would have actually Would it have killed him to have wrote me a note, put a penny in an envelope, and said, hey, Peter, you win. Here's the penny. Good thing I didn't take you up on your offer to bet more. You nailed this one. I got it wrong. Would it kill the guy? No. Nobody, the only guy that's ever kind of admitted that he got it wrong, but not to me, my face, but in his Ben Stein, in one column, acknowledged that that he should have listened to me on one thing. And I do believe that when I was on a show with Charles Payne one time on Fox Business, he came on and said, I think he was sitting in for Glenn Beck, and said, hey, Peter, I gave you a lot of grief in the past, but you know what, you were right. So that was a gentlemanly of Payne. But, very few people that have been in debates with me who have obviously been wrong have ever come back and said, yeah, man, hey, you were right. I got to hand it to you. But anyway, I guess, I don't know. I'm still waiting, but not only did Art Laffer not pay up on the bet, not only did he not give me a note or a penny, but to this day, he denies losing that bet. He still claims that he got it right and I got it wrong. I mean, talk about being delusional.
Yeah, I kind of wish you call him up and that, Barry guy and say, hey, look how clown you are, look, something like that.
That's not my style. I'm not going to do that. I mean, if he wants to call me, I mean, he can call me. I mean, I'm sure he's seen that video. I'm sure he didn't realize that I would get a copy of that video and put it up on the internet. So now it's actually out there. So I'm sure there are people. I'm sure the guy's gotten some emails. People have probably tracked him down and sent him some emails. So I mean, he's seen it. He knows I'm right. He knows where I am. I'm not hard to find. So if he wanted to apologize or just give me credit, he could do it. But he hasn't done it. So I'm not going to call him up just so I can make fun of him for being wrong. I mean, I think being wrong is punishment enough.
Yeah, I mean, I wonder how he would react if he got another invitation. Hey, if you want to go on if you want to argue with Peter Schiff again, I wonder what his reaction would be. Anyway, I had a quick question, Peter. I know you're opening, an office here in Dallas, Chicago, and one in Dallas, and are you hiring people? I know I don't.
Yeah, we will be. I mean, those are the offices that we're planning on opening now that we got regulatory permission, to open up new offices. Those are the locations that we're going to start. We're first working on, we're going to move our Florida office into a better location and try to grow out the Florida office because that was our newest office and we really weren't able to build it out the way I wanted to because of the hiring freeze. So I really want to build up my Southern Florida office, so that's a priority. But then I want to go into the Midwest, I want to go into Texas, and I want to go into Chicago. We got a lot of clients in those two states, and I think they're good states to be in geographically. So I want to be there, and we will be hiring people, no question about it. So, hey, feel free to send us resumes.
The thing is, I don't come from a finance background, but I don't weigh 600 pounds either, so I don't know which is more important to you. But
well, hey, I don't discriminate against the obese. Hey, you said that, not me. Anyway, hey, thanks for the call. I'll try to squeeze in one more. Joe in Cleveland, you're on.
Hi, Peter. I think you and Ron Paul are making a tactical and strategic error, and what that error is thinking that any level of government at all is going to be able to handle the future tyranny and chaos that the government is currently causing. I think by complaining about the Fed, what that's essentially doing is asking them to solve the problem, when in reality, they are never going to solve the problem. I think the only way...
I don't think we're looking for the Fed to solve the problem. I think we're both looking for the Fed to stop creating the problems. And I think Ron and I, and of course, we're not working together. We're independent. But, we both want to shrink government, and we both understand that we are staring at a real financial crisis. Anyway, look, I wish we had more time, but you got to call back again on Monday. Be happy to discuss this topic with you. It's an interesting one. Anyway, hey, that's it for this week. And again, this has been Peter Schiff here at SchiffRadio.com. Thanks for listening. We will be back again next week with a new episode of the Peter Schiff Show on SchiffRadio.com, the gold standard in talk radio.
The Peter Schiff Show.